audience. So, welcome once again to our free live webinar. This is absolutely free, as you would know. So, we decided that we want to have this session today just so we could help a couple of people attain financial wealth and for people to actually enhance their trading skill. We have a couple of people here. So, what I'm going to ask from you guys is for you guys to mute your mics and let's try and at least work together. And in that case, we know that we won't have any unnecessary commotions, we won't have any unnecessary problems and drama that happens on the session. But I can see that, we have a couple of people. If there's more coming in, they will find us on the session. So I'm looking at GBP USD. As you can see in my charts, quite clean chart. We try to keep it as as hygienic as possible. So I'm gonna go through this chart with you and hopefully show you how I would look at this. And I'm gonna take a couple of questions after that. So if you will, and you want to know, I don't know who didn't mute their mics. Please make sure that your mic is muted. Thank you. So if you're wondering what we're covering today, I want to cover, candlestick patterns, powerful candlestick patterns that can actually make you profitable, highly, highly profitable. So I'm going to cover a couple of candlesticks, my favorite patterns to be quite specific. And these are like my high probability patterns that I look at for me to actually maximize in my profits. I don't know who didn't mute their mics. Please make sure that your mic is muted. I really wouldn't like to kick you out, but if your mic is not muted, I'm gonna be left with no choice but to actually kick you out of the session. So yeah, we have please mute your mics, guys. Please, guys, so that because this thing will be recorded and I will sit on my YouTube channel. So please make sure that the mics are muted so you guys can be able to watch it later on. So I'm gonna be going through a couple of my favorite candle patterns, and hopefully you guys will be able to see how I actually get my entries and how I actually take my trades as well. So I'm gonna go a couple of elements of my trading day. So basically, how that is, we have a strategy that we use to set up our key levels. As you can see, my chart has these blue lines and this one major line that this market has sort of been respecting for quite some time. So I am on the daily, but I would like to start on the monthly because then this is where you actually get the true directional bias of the market. So if you want to get the true direction of the market, you really want to focus on the higher time frames, because then you know that if you focus on higher time frames, then market will be clean and clear to you and you won't even have to get fake moves. So if you focus on higher time frames, then you know that for sure you are good the proper directional bias of the market. So just by looking at this higher time frame market, we can see that this pair, GBP USD to be quite specific, did quite roll over around this level, and we actually did pull back to higher regions, and this was actually one of our key levels. And if I take my Fibonacci tool over there and I just put it on my chart over there, so this would be my A extension and a B extension as well, we can see GBP USD literally gave us an impulse to the downside and came back to give us a correction move all the way to our 50% level and region. So from here, this would then be our ideal entry, and we would start to look for short setups around this level over here. And then we would know that we hold to our extension levels. But the first thing that you actually want to hold on to is the first support level that you have over here. And then you can hold to the extension levels as well, on the markets. But one thing that I want to highlight as well on this chart is that you can see how this market actually broke below the weekly time frame. So this is the weekly key level, sorry. So this is a weekly key level that we have around 127.50. So market came back to retest this weekly key level with this weekly candle that we're currently on right now. So we broke below this key level and came back to retest. So hypothetically speaking, I would then look for short setups, you know, probably long-term sells or short-term sells, depends on how my market is then lining out on smaller time frames. From this, I want to go to the next smaller time frame. So this is what we call top-down analysis. This is where you start on the higher to come to the lower time frame, all the way to your lowest time frame that you have. So on this kind of a method is you want to look at the higher time frame and then go down to the smallest time frame for you to actually get entries. So now what this means is we did see that on higher time frames the market is looking quite bearish for us, and we do have quite a lot of bearish momentum on the market. So now what I want to look at on the smaller time frames is I want to check how the market closes and how the market behaves based on the smaller time frames. So I'm going to highlight a couple of things that are happening over here for you to actually understand what is happening on this market. So on this market, we can see that market established a new high over and a new low over there. The market is currently giving us inside bar formation around this level. So market came to stall around this level. If you look at this candle, we have a high on that candle. If I can just do that, you know, just a minute. We have a high level of that candle over there. Remember how candles form. We've got an open price, we have a closing price, we have a highest price, we have a lowest price on candles. So you want to actually understand how candlesticks work for you to actually get the right thing on candles, because failure to understand how candles form, that results in you failing to understand how the market moves. So now this means that you have to actually understand how candles form. So based on this candle, so this was actually the one candle that put us onto this consolidative market that we are actually in right now. So just by looking at this market, I can foresee this market sideways. Excuse me, I can see market moving sideways. So what I think is going to happen on this market is going to come and move sideways around this level, move sideways around this level until we break either above or below. But for now, I can see that we are sort of reigned in this little blocks and box that the box that I actually just drew now. So what I want to do is I want to monitor how the market is moving right now for me to actually get entries on this current market that we're in. So what I'm going to do then now is I'm going to at least try and think ahead. So the one thing that I want to do is I want to think ahead, so that by me thinking ahead, I know that actually I'm going to get the proper direction of the market. I'm going to get the proper directional bias, because then I'm using my brains to think, which is what kills a lot of people. A lot of traders cannot think, and this results in them having not to get the proper setups on the market. So if you can use your brains a little and think ahead, then you would then anticipate and probably get probabilities of how the market is going to move from that point in which you're at to where market is going to go. So right now the market is currently at its lows, and we did see a strong bearish momentum on the monthly. So now, as you do know that market moves in trends, you know that market moves in trends. So on any kind of a trend and in any type of a trend, you expect for market to give you lower highs, for market to give you lower lows. If it's on a downward trend, if it's on an upward, you expect market to give you higher highs and for market to give you higher lows. Now this is important to understand, because as soon as you understand this, you understand that you want to buy low and sell high. So if this is a selling market, if I'm correct in my understanding and in my prediction that we are currently on a selling market, then it means I have to at least wait for price to pull back a little before I actually come in with my sells. Now what kills a lot of traders and what kills a lot of people is people want to sell on a selling market when price is at its very lowest point. So you want to get the market to at least pull back a little before you actually come in. So right now I do see that the market is actually at its very lowest point, and I want to get at least a pullback to higher reaches and levels. So I'm going to use one of our methods that we use, which is our fib tool over here. I'm going to take my fib tool and at least look at my 38.2 retracement level. Why am I looking at the 38.2 retracement level? Because 38.2 is in confluence with this key level that we have over here. So this would obviously be a smaller time frame level, so I'm going to take it out. This would be a smaller time frame level, so I'm going to annotate this and say this is my weekly. So let me just write it like this. So this is my weekly range resistance. So this is why I'm actually putting it over there. So I'm saying that at least I'm going to wait for market to pull back to that level before I actually come in. Now, when market gets to that level, there's two things that might potentially happen. Market might come and test this resistance over here. Market might again test our Fib retracement level. And the third and last thing that I can see right now in this market is market can come and retest this moving average that we have over here before we actually start sinking. So my mind is saying to me, okay, I can see that this market is actually quite bullish. And just by looking at the formation of the candles, I can see that there is kind of a head and shoulder pattern that formed on smaller time frames. If you look at this, this would then be our left shoulder, this would be our head, and this would probably be our right shoulder. So I actually want to see what happens on this market right now. So I'm gonna go down to my daily time frame to actually see and monitor what is happening right now. And I can see that if I come to my daily time frame, there's quite a beautiful setup information that is happening. Allow me to remove my ranging tool over there for me to actually see what is happening over here properly. So right now you can see that market gave us a huge spike in on that weekly, and they came down to drop and test lower levels. So the reason why market came to test that level was because this level is a previous level that we have on the market. So that's a previous liquidity level. So if you look at that level, that's a previous liquidity level. Now, what happened on this market is market came to literally spike that liquidity level before market started rising. So what happened here is I want you to actually look at this properly. No, this is just for the sake of those who can't see this, obviously, but I know that most of you guys are actually seeing it as I'm drawing it. But this is what actually happened on this market. So this is where I was expecting market to spike at least deep on that level. But you know, you just are working on probability. I expected a very deep and strong pin bar on that level, but market didn't even come to that level, unfortunately. But I do see potential for us to come and test these lower levels tomorrow, really, tank. So what happened is we had our left shoulder, we have our head, and right shoulder was meant to be on this level. Now there's other tools that you can use. Now remember, this is the daily time frame, right? So this is your daily time frame, and you actually want to use a whole lot of things before you come in on this market. So I can say that I expect market to at least give me a deeper pullback onto that level. So I would then expect a deeper pullback onto that region, a deeper pullback onto that region. So if we get a deep pullback onto that region, this would be a high probability setup for me and a rise at least to that weekly range before we actually drop. Now, there's another thing that I'm going to look at now. We left with about 10 minutes. In 10 minutes, I will be done explaining this, and hopefully we host another session and, we do the same thing. So if you look at this now, we have at least this level, which I expect market to pull back before we actually get our long-term buys, our short-term buys, excuse me. So now I expect market to at least pull back to that level before I actually come in. But at this moment, I'm going to look for trades and everything for me to actually know how the market is trading right now. So I'm going to look at how this trend line is setting up. I'm obviously going to draw it there. To see how this trend line is setting up. So at least I know that I can expect market to hit that level, move sideways, whatever they decide to do until they actually come into this trend line before I can sell any further. But for now, I can say that if we close below this level, we may see a slight pullback to that level, 126.20, psychological level 126.20, before we actually come in with any kind of positions on this market. I can then go down to my smaller time frame to see what is happening on this market and actually confirm what really happened on this market. Now, had I seen this now on smaller time frames, I was going to know how to actually trade this market, because at this point, this is what we have. We have a level that dates back to this point. We have a support resistance level that dates back to around this region over here. Market came to spike a couple of times, and you can see how we actually came to spike multiple times over here. Now, had we waited for this formation on that time, then we obviously wouldn't get it. We weren't obviously going to get these buys if we were going to look at the higher time frames alone. Now we come to smaller time frames to read the price and to see how the market is forming before we can make any trading decisions. Now, remember that on daily time frames, we expected for the market to at least pull back to that level and region. But when you come to smaller time frames, you can see clearly that market is actually giving you signals for buys at this level over here. So what we have right now is we have market giving us some beautiful formation over here. My favorite candlestick patterns. So you have a couple of candles that actually confirm a buy setup for you over here. You have your shooting stars, you have your morning stars forming over here, and this is a high probability setup for me that tells me that, you know what, we probably might not even get to that level, and we might just rise and rocket from this level. Now, we just broke out from this level, and we are going to wait for entries for us to actually come back. So now, if market can pull back this green rectangle over there, then this would be a beautiful position for us to come in. So that is around price 12700. So if price can pull back to 12700, remember that that's just the psychological level that we have. So if you place buy stops around 12700, you know that you obviously have your stops below 12670, and your take profit is around 128 130. So this is quite a good risk to reward ratio, because then you know that price would obviously have to break, you know, so many zones for you to actually be stopped out. And we are quite sure that bullish momentum is building on this market. Now you have a nice beautiful double top formation, double bottom formation over there, and we can see this market rising and rocketing at least to that level over there, 128 130. So that's just about it, guys. And this is how I actually look at the markets. I hope you guys learned a thing or two. And let's get a couple of questions before we actually close it down. And if the questions are a lot, we're obviously going to have to, skip on to the next session as well.